Live from Dallas-Fort Worth, this is WFAA News.
Money runs deep in Dallas above I-30. Banks are everywhere, but south of 30, where many minorities live, it is a credit desert. In our series, Banking Below 30, we've been showing you how banks have failed the minority community and how bank regulators allow it and even encourage it. Hi again, everybody. I'm David Schechter, and over the next hour, you'll see the results of our investigations. You'll also hear from experts about why it's happening and how to fix it. Of course, I also want to hear from you during this time, so tweet me during the hour using the hashtag BankingBelow30, and I'll be reading some of your messages on the air, like this one from Latasha Wright, who recently told us this needs to stop. Let's get right to it. In our reporting, we found banks lend relatively little money south of I-30 in Black and Hispanic neighborhoods. At the root of the problem are failed government policies and a lack of oversight. Here's the latest installment of Banking Below 30. Dallas is a city of enormous prosperity, and it's a success story that would not be possible without big banks. But banks aren't supposed to just lend money to wealthy people. The law says banks also have to lend to low-income people. But despite the law, banks make relatively few loans to low-income borrowers. In fact, we found instead of lending money, banks have another way to comply with their obligations. They invest heavily in low-income apartments in areas of slum and blight, and the government rewards them for it. So let's start this journey by talking about the location of this low-income housing. We've identified that banks own or have owned 50 low-income housing developments in Dallas. Those banks include American Express, Bank of America, Chase, Truist, and Wells Fargo. The majority of the apartment buildings are below I-30, where the population is mostly Black and Hispanic, and that includes Sterlingshire Apartments.
It happened tonight in Pleasant Grove.
Sometimes I hear like gunshots.
He was just an innocent bystander.
Bullets don't have no names on them. So they shoot and they can fly anywhere. They come all the way over here.
Some neighbors in Pleasant Grove were discussing living in fear.
That's something to worry about because I got kids of my own, so.
They put these apartments in the wrong place.
Number one, I totally agree. They should have never been there in the beginning. At that corner, we've had issues after issues after issues.
Terrence Perkins is the pastor of Abundance Grace Church near Sterlingshire.
When you take a population of people and put them in one place, you create, and no resources, I think you lead them to a dead end.
Would you be surprised to know that that property is owned by Bank of America?
Really? Wow.
Corporate records show Bank of America owns 99.9% of Sterlingshire, but the bank is what's called a silent partner. It's the developer that actually makes the decision about where an apartment is built and how it is run. But the law says banks can only make these investments if they serve the public good by putting these apartments in places where families can thrive. But we found that's not happening. Look at this. These highlighted slivers and shapes are neighborhoods that Dallas police designate as crime hotspots. We found 25 apartments that banks own or have owned are located inside these crime hotspots. Perkins says banks don't invest in these properties as charity, they do it for profit.
And definitely it is a solid investment. But when you look at it from a moral perspective, I think it's totally wrong. They getting richer and richer off the poor.
Where you live really matters.
Ann Lott is a fair housing advocate at the Inclusive Communities Project. Her nonprofit has sued suburban communities over their refusal to allow affordable housing. Those refusals are one reason that housing is continually built in the same inner city neighborhoods.
And we have to stop a system that consistently puts poor people in areas where they cannot thrive.
But that is exactly what's happening with bank-owned housing. The law says density of low-income housing shouldn't exceed 20% in any given area. At Sterlingshire, the density is 21%. In this cluster of 3 bank-owned apartments, the concentration of subsidized housing is 43%. And over near Redbird Mall, we found banks own or have owned these 3 apartment buildings, where the density is 63%.
Banks are contributing to the slum and blight of the communities. And one could argue, in effect, that they have become the new slumlord.
At this point, you might be thinking, banks are here to make loans. What are they even doing owning low-income housing? Well, when banks make these kinds of investments, the government gives them high marks on their bank exams, even if they're making relatively few loans. In 1977, Congress passed the Community Reinvestment Act. Under the CRA, the government grades banks on how well they're making low-income loans. In time, regulators revised the rules so banks didn't just get credit for making loans, but also for investing in low-income housing. Today, we found many banks don't lend much money in low-income neighborhoods, but make huge investments in low-income housing, which earns them a passing grade on their CRA exams. Remember, there is a large minority population in southern Dallas. This is a map developed with the advocacy group, the National Community Reinvestment Coalition, and it shows how many home loans are written in Dallas County. The lighter the color, the fewer loans, and all the red dots are bank-financed low-income housing.
It doesn't make any sense.
Laura Beshara is a civil rights lawyer. She's filed a number of lawsuits over affordable housing policy all the way to the Supreme Court. What does all this say about the CRA?
It's perverted the entire meaning of the Community Reinvestment Act. It's added more new residents to an area of high crime that didn't need to be there. And at the same time, they're not making any loans to the people that live there.
Here's the exam for Bank of America. The Office of the Comptroller of the Currency, or the OCC, gave the bank an outstanding rating for reinvesting in North Texas's low-income communities, spotlighting $813.9 million of investment in affordable housing. We found Bank of America has invested in 13 low-income apartment buildings in Dallas, including Sterling Shire, the complex just up the street, and another 2 miles to the north. Using public records, we estimate Bank of America has invested $50 million here. But what about loans? Well, analysis by the NCRC shows in 2019, Bank of America made 2 mortgage loans in this same area. In a statement, Bank of America says there is a tremendous need for affordable housing nationwide, and Bank of America is committed to supporting our clients and communities by providing upfront financing that is a critical component for organizations to be able to expand housing opportunities. These apartments that banks own, they're profitable. And that's mostly because the government gives banks major financial incentives to make sure that this housing gets built. The incentive is called the Low Income Housing Tax Credit. And each year, the United States gives out about $8 billion in credits. Almost all of it goes to banks, with the government eventually paying them back 100% of the money they invested.
This is a really good opportunity for banks to make money. You can get the tax credits, you can sell them for a profit, and bank ownership and tax credits has skyrocketed. It's estimated that there are at least 85% of the owners of tax credit projects.
To be eligible for the government's generous tax credits, the rules say that apartments have to be built in neighborhoods that have a formal revitalization plan. For example, a plan area might have a health clinic, community center, and educational and economic opportunities. But we found that's also not happening. Dallas has designated revitalization plans in these 5 neighborhoods, and banks have financed a total of 6 affordable housing projects inside those zones. But these 44 apartments were all built outside revitalization areas. Regardless, every project on the map was awarded tax credits. In your opinion, are these projects eligible for the tax credit?
I don't think that they should be eligible. I don't think they are.
The Internal Revenue Service is the agency that issues tax credits, and it's been the subject of several critical audits, including in 2015 when examiners found IRS oversight has been minimal. I asked the IRS why it gives tax breaks on apartments that are in places where families have to live in crime and blight. The spokesperson responded, "Since your story involves a specific group of taxpayers in a certain area, the IRS will decline any comment."
The program has operated for over 30 years without any requirements of where the housing should be located. They don't care where these projects go at all. And they don't care who it affects.
In 2015, before Sterling Shire was built, Bashara sent a warning letter to regulators. She said Sterling Shire's paperwork failed to disclose significant criminal activity in the area. She wrote, "This false representation can be the subject of a suit by any future tenants of the project for the consequences, including harm from the high crime in the area."
And we're starting with some breaking news right now in Dallas. A teenage boy was caught in the middle of a shootout and killed.
The innocent bystander on his way back home got shot because of exchange of gunfire.
13-year-old Malik Tyler lived at Sterling Shire, and he died a few feet away in the parking lot of this convenience store that had a long history of violent crime.
Too many people out here getting hurt for no reason. He was an innocent child. When is it gonna stop? When are people gonna stop? You do not know what you took from this family.
It's appalling to locate a tax credit project there in an area of high crime that they knew was high crime. It's truly horrific.
On paper, the law says banks are required to make loans to low-income communities. But in reality, the government is giving them a pass on that. Instead, it rewards banks for investing in low-income housing in areas of slum and blight. It's a problem that's 30 years old, and it continues. Last summer, developers tried to put in more low-income housing right across the street from Sterling Shire. Perkins and his neighbors fought back and won.
They'll come back to a community that's not going to fight it and put the apartment complex there or the housing community there and then say, hey, look, we've done something great. But in reality, you're only crippling us.
Coming up after the break, I'll be talking with experts at the intersection of banking and low-income housing, so stick around for that and keep sharing your thoughts using the hashtag BankingBelow30, and we'll be right back. As you just saw, our investigation found banks lend relatively little money to low-income communities. Instead, they invest heavily in low-income housing that's built in areas of crime and slum and blight. And the government encourages and rewards that. Joining me now to go deeper are John Taylor, who's the president of the National Community Reinvestment Coalition, which advocates for economic fairness for low-income people. He is in Massachusetts. And Demetria McCain, the president of the Inclusive Communities Project here in Dallas. She advocates for fair housing solutions for low-income families here. The original intention of the Community Reinvestment Act was to get loans to people. How far away are we from the original intention of this law?
This has been a real a problem that I've seen for a long time and that I've been talking about. What they end up doing is taking yet another 100 very poor black people or very poor whites. It's a class law, it's not a race law, and sticking them in the poorest neighborhood. So it's not doing much for the neighborhood. It's not doing much for the families that end up in the housing, except people would argue, well, they're getting a house. That's what counts. On the other hand, we continue to segregate neighborhoods and put poor people basically in their own gated communities.
Yes. So let me move to Demetria on that, because the idea of a roof over someone's head, in theory, like, that's good. We have a complete lack of affordable housing in this community and communities everywhere, frankly. Isn't a roof better than nothing?
It's so interesting you say that. That was the argument in 1949 in Congress when there was the issue of affordable housing versus fair housing. They were like, let's just build it now and we'll deal with the fair part later. And here it is, 2021. We're talking about a lot of children in these apartment complexes that have been, and I call them abused and neglected neighborhoods versus slum and blight, because that talks about the result. But the action is at the hands of big time decision makers. And so, no, it's not just about having a roof. It's about where you get to live. And it's also about those homeowners who live in those areas who aren't getting those loans, even not just to buy. They bought a long time ago. They're not getting loans to even repair. And the way we've seen this play out in the Dallas area is not just along class lines, it's along racial lines.
Dimitri's point is a very important point. If we continue, clearly we need housing for people. Having a roof over your head is better than having nothing. We all get that. But that isn't the choice. The choice is having a roof over your head in a sustainable community that has economic opportunities, good schools, jobs that are available, crime rates that are lower. And why shouldn't we ensure that low-income people, people of color, whites, brown people, black people, Asians, that they have the opportunity to live in healthy communities as well, because that's in all of our interests.
Demetria, again, the banks aren't setting the policy, but they fund it. Like they make it go. It's the gasoline in the engine is the banks, right?
The banks certainly fund it and the banks own it. All right. But here's the thing. These tax credits that we're talking about come from the Treasury Department, but they really have been overlooking their requirements to even pay attention to fair housing when they are administering their tax credit program. And that's a huge problem.
Most of them, particularly all the big banks, Bank of America and others you pointed out, they all get outstanding CRA ratings from the regulators.
And they also give, they might give some minor grants to some local nonprofits and things of that nature, but those funds don't compare to the amount of money they're making off of selling these credits and investing in this low income housing.
Is it just much easier to invest $100 million or $1 billion in housing, and you can kind of write a check, than it is to make connections in a community and write loans for people and work with them to get them to a place where you can give them credit?
A loan officer making one mortgage, whether it's for a mortgage for a $100,000 home or a $300,000 home, it's the same amount of time, and it's the same amount of time on each and every mortgage. So it's more time consuming.
Dimitri, I think people would say, are there people in those communities that are credit worthy? Because I think that's maybe a conception like, well, they don't loan there because nobody's going to be able to pay the loan back.
Absolutely. Absolutely. I mean, there are plenty of people who are credit worthy. Absolutely. No doubt about it. We talked about high crime areas. It's not that the people who moved into those low income housing tax credit apartments brought the crime, right? Like I said earlier, abused and neglected neighborhoods. These are crimes that has been gone unabated. And so there are people there who just have all the values that the rest of the country has, right? And they need some loans. They're credit worthy, yes.
John, what's the possibility of getting decision makers in Washington to put some more pressure on here?
Well, your question couldn't be more timely. They're actually considering revising the Community Reinvestment Act. The previous administration had proposed a rule and passed the rule, which didn't get implemented because it needed a time frame that overlapped with this new election. So any of your viewers who want to weigh in with your congressman, Republican or Democrat, and saying, look, CRA is important, and we want to get investments in low wealth and moderate income and middle income neighborhoods, and try to create economic opportunity for everybody. Saying that to your congressman goes a big way. I mean, if your congressperson hears from 5 people talking about the CRA, who are not people like me or Demetria, that's a big deal for them in the course of a week. Just 5 people.
John Taylor, Demetria McCain, thank you so much for this conversation. I appreciate it.
Thank you for having me.
And we've got more expert analysis ahead. We'll hear from a law professor who's documented how 80 years of government policies have served to segregate the black community. But first, let's get a quick check on your forecast.
All right, thanks, David. I want to show you outside our beautiful Cedar Hill Tower cam. Jeff Stevens, our engineer, put this up. He loves this camera. We're talking about how beautiful it is. 68 degrees the temperature now out at Cedar Hill. Into the low 70s in Dallas right now. You see these clouds that are moving in. This is ahead of our next storm system, and it is a very weak storm system that's going to bring us a chance for just a little bit of rain tomorrow, some sprinkles or some very light showers east of the Dallas-Fort Worth area. So you can see some clouds streaming into the Dallas-Fort Worth area right now. Really pretty quiet, maybe a sprinkle or 2 up toward the Red River. Over the next 12 hours or so, the system starts to approach By 7 o'clock tomorrow morning, the commute looks okay. There's going to be mostly cloudy skies for about the eastern half of North Texas. By the afternoon, though, that's when we'll start to see a little bit more scattering of showers and some sprinkles, too. Not much to be concerned about. Tonight's lows, low 50s, but the cold front brings a cool down for the weekend. More on that coming up.
Welcome back. Our next guest is Richard Rothstein. He's a distinguished fellow at the Economic Policy Institute and the author of The Color of Law, exploring the government's role in racial segregation.
It's wrong to think of this as a Dallas problem. This is a Dallas metropolitan area problem. And so long as we have white suburbs, we're going to still perpetuate this segregation if we restrict the solution to the city of Dallas alone. This problem wasn't created in Dallas, it was created in the suburbs.
You know, we see a lot about banks saying, well, we want to be part of the solution. We understand, we hear you. But on the other hand, they're investing billions of dollars into this problem.
Well, I think in your question, you gave the answer. It's hypocrisy. The banks are perpetuating the problem, and the federal government subsidizes their perpetuation of the problem by approving these kinds of projects. So I lay the responsibility for this more on the federal government than on the banks. If the federal government wasn't encouraging this kind of practice, it couldn't happen.
So the federal government is really, I agree, at the root of the problem. What has to happen at the federal level to change what we just saw?
Well, for one thing, the IRS has to cease giving a priority to projects that are placed in low-income neighborhoods, placing a priority there rather in high-opportunity neighborhoods where there is access to good jobs and transportation to get to those jobs and clean air. That's where the priority should be, and the federal government has the opportunity to enforce such a requirement. At the other side of the coin, and this is, I guess, what you're focused on, is the Community Reinvestment Act has to insist that banks actually make loans to African Americans and to other low-income families in those communities, not loans to white businesses that come in and build developments there, but loans to the residents of those communities so that those communities can improve.
Is this systemic racism? And if it is, what can people do about it?
The policies to redress segregation are well known. We've talked about some of them. There are many, many others. And what white people need to do is not just express their support for those policies, but commit to engagement in political action.
Along those lines, this is where the rubber meets the road, right? If people say, well, things need to change, and the change is, well, you're going to have affordable housing, maybe somewhere close to where you live, then people really have to decide what they're all about.
That's correct. That's correct. One of the biggest problems that we face is something that I'm sure you've heard of. We call them NIMBYs, not in my backyard. People who express support for policies of desegregation so long as it's not in their own communities.
Professor Rothstein, thank you for your time and your excellent work and your book. Really appreciate it.
Thank you very much.
More Banking Below 30 when we return with a closer look at how banks deny service to people who live in Southern Dallas. We will be right back.
Live from Dallas-Fort Worth, this is WFAA News.
I'm David Schechter, and we're back with more Banking Below 30, and we've heard from several of you within the last half hour. On Twitter, Dr. Fred Jones says it's about time this comes to light. The conversation has come up again and again, and the rich get richer. Charlotte Allen says, in part, a problem for years. Banks get richer from the poor and return that investment to the rich. And keep sharing those thoughts. We want to hear from you at hashtag Banking Below 30, and thanks to both of you for participating in this conversation. Banks are required by law to draw a map that shows the area that they serve, and those maps can't have boundaries that arbitrarily exclude minority communities. But in Dallas, we found that is exactly what's happening. Interstate 30. So many people drive east, west, north, and south of it, you might not even realize how it carves Dallas in two. I-30 is also the line that largely separates financial opportunity in the north from financial barriers in the south. Why is that? Well, we have found new evidence of practices that exclude Black and Hispanic residents from getting bank loans below I-30.
Petrie says he went to Houston to get financing for his business after 7 local banks and savings and loans turned him down. He sees his problems as typical, wanting to expand, but getting little or no support from financial institutions.
In this community, it's an economic embargo. We wouldn't have a housing problem. We wouldn't have an unemployment problem. We wouldn't have a police problem.
That was 32 years ago. And today, car wholesaler Robert Petrie is still in business at that same location in South Dallas.
The things that you talked about in '88, is anything better? It's all pretty much the same?
I would say worse.
Today, Petrie also owns 132 acres of land, including a large event center called Skyline Ranch. He says all of that comes despite a lack of access to bank loans below I-30.
They feel that, hey, the black community, blacks don't deserve opportunities. So we're going to deny them now.
But they're not just sitting around like saying that, right, in their boardroom,
Well,
are they?
there are ways, yeah, because they underestimate what we can do as a people.
Above I-30, there's a high concentration of white people and upper-income neighborhoods. South of 30 is mostly Black and Hispanic people, with 38% of residents living below the poverty line.
This area over here is the corner of the Dallas North Tollway and Northwest Highway. And there are just banks all over the place. There's a bank over there.
There are 31 bank branches packed into this corner, while in all of southern Dallas, there are just 58 bank branches in total. Above I-30, across Dallas County, there are 474 bank branches. The city has a long history of excluding blacks from bank loans. It's called redlining. Check out this map from 1937, with red lines drawn around the south side communities that we're talking about. For decades, banks openly denied loans here, particularly to black communities, and the government said it was okay. Then in 1977, Congress attempted to remedy the practice of redlining with the Community Reinvestment Act. The CRA encouraged banks to meet the credit needs of the entire community where they operate. Under the CRA, each bank draws an assessment area map, which basically outlines where it does business. And the law says a map must contain entire counties, cities, or towns, and it cannot arbitrarily exclude low or moderate income geographies. But the CRA recognized some banks might not be able to serve an entire community, and in that case, they could use something like a highway to draw a boundary, as long as that new map does not illegally discriminate. So our team asked every bank in Dallas County, 105 of them, to provide us with their assessment area maps, the area where they do business. And what we found is that 20% of the banks in Dallas County draw maps that exclude all or parts of southern Dallas.
So the opportunity is there for any bank, if you want to make a committed effort to be part of this community, be part of the effort. I think it's here.
James McGee was a compliance manager who used to help banks follow the rules of the CRA. Now he advocates for greater reinvestment below I-30 as president of the nonprofit Southern Dallas Progress.
So when they draw those kind of maps, is that discrimination?
I think it's discrimination because you look at the demographic of people and where they're located and you're excluding them. I think it is discrimination.
Here are some examples of what we found. Dallas Capital Bank has a single branch in Dallas County near the Tollway and 635. From this location, Dallas Capital provides services to all of Denton County and half of Collin County, but covers virtually nothing in Dallas County below I-30. Dallas Capital Bank has declined to comment for this story. Benchmark Bank has 3 branches in Preston and Royal, Hillcrest and Lovers Lane, and McKinney Avenue, just 2 miles north of I-30. Benchmark drew a map that extends north into portions of Denton and Collin counties and picks up parts of Dallas's affluent Kessler Park and Bishop Arts neighborhoods in Oak Cliff, but little else below I-30. Benchmark says all areas conform to CRA regulatory requirements. There's also Interbank. Its 2 Dallas County branches are located at 75 and Mockingbird and the tollway at Lover's Lane. From these branches, Interbank drew a map that excludes virtually everything south of I-30. To the south of Dallas County, Interbank also has branches in Ellis County, and one of them is just 2 miles from the Dallas County line. Interbank serves all of Ellis County, Erath, Somerville, Hood, Parker, and Tarrant counties, but only half of Dallas County. Interbank declined multiple requests for a comment, but in its most recent bank examination, regulators said no evidence of discrimination was identified. Why do you think it looks like that map?
Oh, they made a conscious effort to create it like that. And that's going to be a senior management decision that's, particularly, doing that and okaying it. And it's additionally signed off by the regulators.
Banks with maps that include all of Dallas County make 48% of their loans to whites, 22% to Hispanics, and 7% to blacks. Those numbers don't total 100% because not all borrowers report race data. But by comparison, we found banks that exclude Dallas below I-30 lend 45% to whites, 8% to Hispanics, and 2% to blacks. But what about the bank regulators, the people who grade the banks every few years on how well they serve low-income communities? Well, the regulators give passing grades to banks 98% of the time based on the exams that we reviewed. And James says that's happening because regulators don't scrutinize how the maps are drawn. They just grade the banks on what happens inside the maps.
It has to be judged harder by the regulator. If we're in school and every class passes, I think it's something wrong with the test. And I think outside of that, the banks are going to be hard inclined to possibly improve their current strategy. Because it's working and they're passing their exams.
3 different government agencies work together to evaluate banks. The Federal Reserve Bank declined to comment for this story, but it's proposing rule changes to modernize regulations because of weaknesses in the Community Reinvestment Act. The Federal Deposit Insurance Corporation, or FDIC, says if our examiners identify a pattern or practice of discrimination at an institution, the case is referred to the Department of Justice for appropriate action. And the Office of the Comptroller of the Currency, the OCC, regulates big national banks. The OCC has a new rule requiring that assessment areas be no smaller than a whole county. So what can the regulators do?
Well, what we're going to do, we're going to make them do their jobs. We're going to force them to do their jobs, and we're going to force the banks to make loans in our community.
None of what you've just seen surprises Robert Petrie at all. He's been discouraged by banks his entire life, and just this January, he sued one. Petrie claimed because he's black, a loan officer quoted him outrageous terms to make him go away.
See, a lot of the things that's happening that's negative in the black community has been by design. And there are forces that have designed these problems that we face, and that's racism.
I think the time has come to bring to bear the power of the nonviolent direct action movement on the basic economic conditions that we face all over the country.
Economic justice is not about charity. It's about opportunity to borrow money, pay it back, and participate in the larger economy. But on the road to opportunity, unlike any other highway in Dallas County, only I-30 seems to get in the way. I'm David Schechter reporting. Coming up, more with James McGee and how you can be a part of the solution. Also, we'll have a quick check of your forecast, so stick around and use that hashtag #BankingBelow30. We'll be right back. Welcome back. So we just saw how some banks draw service boundaries that exclude virtually all of southern Dallas County, where the population is largely black and Hispanic. What's it going to take to fix this problem? Rejoining us now is John Taylor, who's the president of the National Community Reinvestment Coalition, which advocates for economic fairness for low-income people. Also, James McGee is the president of Southern Dallas Progress, working to improve access to capital in Dallas's minority communities. James, I want to start with you. You kind of got me started on this whole journey. You told me you'd seen some of these maps that excluded large parts of the county below I-30. When you look at what these maps say, what are they saying to you?
I mean, they're currently saying that the Southern Dallas community is still redlined. I mean, so that's the reason why they're having access to capital problems.
What do people, what's the sense in the community about the lack of access to capital? We heard from Robert Petrie in that story, but you didn't need the data to prove it to yourself. So what's that story?
So as for the data just kind of backs up what the community already knows. I mean, there's not a lot of access to capital within the neighborhood. The neighborhood is currently underserved and has been underserved for a very long time. I mean, equity is needed as far as, any type of lending in our area.
But in terms of the regulators saying, well, it's okay if you just serve this much of the county, and then saying to another bank that may be similarly suited, well, I see you're serving the whole county and that's okay. I guess that's a standard that doesn't seem to make sense on its face, does it, John?
No, not at all, because the banks, remember, there's few industries that have the kind of support that banks get from the federal government. And let me just say that this isn't not lending to working poor people, and we're obviously, very low-income people. They're just trying to do what everybody else has done, and that is to build wealth the old-fashioned way, which is to be able to borrow it. And it's in everybody's interest to have as many people building wealth and becoming stakeholders in the community, whether it's Southern Dallas or whether it's, any place.
James, there are some entry points for the community, and I know you're a real organizer here on getting to a bank at a critical moment where they're really paying attention to you and trying to get them to loan money. Okay, so, and that's called this community benefits agreement. Can you talk about how you organize people around that and how you talk to banks about setting up an agreement like that?
It actually starts with a grassroots community-based organizations coming together and putting their needs in writing. And from there, you kind of work with NTRC as far as talking to the bank, say, hey, this is what the community needs. This is what the bank will provide. And it's putting actionable goals, year by year as far as different metrics. I mean, so that's measurable and we can hold them accountable to making those.
And John, what is the leverage point there that banks want to do these?
The regulators are mandated to look at the bank's performance under the Community Reinvestment Act. Are they lending to all creditworthy people, not just the rich creditworthy, and not just the high middle income creditworthy, but working class people, moderate income people, people who can show that they can pay the loan back if you make it to them. And that's when, when that occurs, that's when the conversation gets real between community leaders like James and others who look at the bank, sit down with the bank and say, oh, well, look, you haven't done a good job in this area. We don't want you to expand to another area without paying attention here. And then they say, you're right. We're going to make a commitment to reinvest safely and soundly and responsibly in that area. It's never asking the bank to open the vault and throw the money away. That's not good for anybody.
James, you're working on one of those right now. You don't have to talk about the bank because I know you're working that in the background, but are you making some progress with your community benefits agreements? Because I think this is somewhat new for Dallas.
Yes, it is somewhat new for Dallas. I mean, we're actually making positive strides to do that. That bank in particular was very open as far as to hearing the community needs, and then also from the community kind of educating them, explaining what's capable of what's doable within the bank's realm. I mean, so that's been positive as far as that bank. But I would encourage, if we can, get more banks, and that's just one of 110 that are located in Dallas County, more banks to step up to the challenge to meet the needs of the community.
One thing that I've noticed, John, that seems to be missing is you got the banks and the regulators, and they sit around and they talk about how the bank is performing and how they can serve the community. But at that table, the community isn't there in any kind of formal way. So you got these parties trying to decide what the community needs without really any kind of formal role of the community. That seems to be missing.
The regulators have stopped talking to the community groups, and that's unfortunate because how else are you going to find? The law requires them to meet the credit needs of the communities they're chartered to serve or from where they take deposits. Well, how are you going to know what the credit needs are if you don't talk to the people, if you don't talk to business people, if you don't talk to individuals who are involved in the process of trying to get people loans, mortgages, small business loans, and so on? So it's incumbent upon the regulators to really take the time to find out what the credit needs are.
What is your message to our elected officials about what they need to do right now?
My message to the elected officials are, we need you right now. We need you to come represent the community, come actually speak, and bring the banks together, and let's work toward solutions. I mean, because our community has suffered enough, and I think, you know, going forward basis, we should work better as for serving them.
Thanks to John Taylor and James McGee. Remember to call your congressperson. And as a quick update, Congressman Al Green of Houston chairs the House Financial Services Subcommittee on Oversight and Investigation. His office told me this week that Green will hold a hearing this year to investigate the weaknesses in the CRA that we have exposed. That's good news, and we'll be right back.
Welcome back, everybody. I hope you enjoyed the beautiful day. What a day. 74 degrees the high this afternoon. Normal high is 65. Low this morning, close to the normal. Normal is 44. The low this morning was 46 degrees. Right now, still at a nice 72 degrees out at DFW. Winds are out of the south at 14. Gusts have occasionally been as high as 20 to 25. You see a few clouds starting to stream into North Texas. It's a fair chance that a lot of what you see here is not reaching the ground. These little green returns here are sprinkles or showers. If anything does, it would just be a raindrop or two. And that's the chance of rain that we have through this evening, and the same chance of rain that we'll have throughout the day tomorrow. So this is Friday at 7 o'clock in the morning. Your morning plans, they're totally fine. I do not anticipate any issues whatsoever with any commute. And as we head into the afternoon, the rain coverage just a tad higher. 10% coverage for the Dallas-Fort Worth area, 20% coverage off to the east of the Metroplex. If you're going to find any sort of, we'll say, more measurable rain or a better chance of measurable rain, that's going to be in far east Texas, or there'll be some scattered showers, maybe even a few thunderstorms. But like I said, a vast majority of you will not see a drop of rain tomorrow. But if you do, a trace to perhaps 1/10 of an inch of rain in the Dallas-Fort Worth area. The higher totals, 1/10, maybe 1/4 of an inch. That's going to be in far east Texas. So tonight, a few sprinkles, winds out of the south 10 to 20. The low tonight is 52 degrees. Tomorrow, 67. Partly cloudy skies. Again, a really low rain chance. Winds will shift from the south to the north. It's a cold front that's coming in. It's not a really significant one. You see temps only go down to the mid-60s on Saturday. That's actually closer to normal than where we were today. 68 degrees on Sunday. A really good-looking weekend. There's the rest of the 10-day forecast. Mid-70s on Tuesday, and then you notice the Wednesday, Thursday, Friday, even into Saturday of next week turns a little bit more unsettled. We'll have daily chances for scattered showers and storms with temps remaining close to 70 degrees. We'll be back after the break.
Thanks for watching our special edition of the 4 o'clock news today. I'll be answering your questions on Twitter, so tweet me using the hashtag BankingBelow30. And now here's what's coming up at 5 o'clock in the news. First, a new vaccine hub is open in Fort Worth, and the local leaders there hope it will help underserved communities have better access to shots. We'll break down how you and your family can get signed up. Plus, a Dallas police officer arrested on 2 unrelated murder charges. What we've learned today about the ongoing investigation. Thanks for joining us at 4. We'll be back here tomorrow at 4 again on Friday.